Welcome to Trading Lounge and the Commodity Futures Report for Thursday, March 24, starting with the US dollar index here. As you know, we've been looking at an A and a B and a C for wave 4 here and expecting the market to push up. So we've just been, observing it. It's not the best looking pattern in terms of a C wave here or an impulse wave to the upside, but it is in its own way moving higher, so we'll just stay with it while this low comes into place. And obviously at the 100 here we're going to see resistance, but the idea is to look for 5 waves to the upside, so it probably counts as 1 and 2, and then 1 and 2 here, and another little 1 and 2, and building to the upside at that point. So a stronger US dollar, and over to the gold, and many commodities are correcting like this in terms of having a top here, well, crude oil for one. In this particular instance though, we can count a clear 1, 2, 3, 4 and 5 down here for wave A. It's possible that wave A could be here and wave B could be over here, and then wave C down here, and wave 2 being already in place. So we'll keep an eye on that possibility as the market climbs a little higher. Now the wave B's 50-60% retracement level is up around the $2,000 mark here, but also to the length of wave A here and wave C can have a bit of equality in them. So we also can see that within minor group 2 here, 1965, 72 and 80 is where the supply is going to be. So looking at the length of wave A and where the supply is, we may only get up to 1965 area there, but we'll count the wave structures as we go, and being conservative here, we can look at 1 and 2 here, then 1, 2, 3, 4, 5 for the third wave, fourth wave, and then 1 and 2 in here, 3, 4, 5, and actually be completed at that point there. The other count here would be looking at wave 1 and 2 here, but then looking at this as 1, 2, 3, 4, 5 for 1 and 2 here, and then going up for 3, 4 and 5, which is probably a little bit more realistic. But as long as you know that if you're trading long, then that 1950 there is going to, obviously create a high there for at least the short term. So you probably see a classic trading levels pattern above and below that level there. Silver will be doing much the same as well. From the top here, down here is the A wave, and then an A and a B and a C wave. It's all pretty clear at this particular point. There's still further to go to the upside after we've called this low in through here. Yeah, it's just further to go up. Nothing really more to sort of do here. If you're long, that's good. Nice pattern at this medium level 25 there. Once again, you can start to see impulse waves moving to the upside here, so that should continue to the upside. I mean, the other side to this really is we could look at this as 1 and 2, and 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave, and then have an ABC pattern here. From this area here is an A and a B and a C coming back, and then moving up for wave 3. So that's possible. Or we look at it as 1 and 2 and 1 and 2 here. Whichever way you go, you want to leave the stop out of the way for this market. So taking the low here and the high here, make sure the stop is under the 61.8%, so under the 24.80 at this particular point in time. But that's where it goes. We'll be looking to purchase at this further downside structure over here, and all up this side here, so that's going to be exciting. Iron ore, we've got daily chart. We've got wave 1 here, 2 here, 1 here, 2 here, and then 1 here and 2 here. And then in here we've got 1 here and 2 here again. As soon as that top's taken out here, then that helps us confirm that the market will be in a bullish trend, because on the flip side of this, we could look at this as an A wave, a B wave and a C wave as part of this other big trend down here. We know the CCP traders want to keep the price down, but they can only sort of sell so much. They don't have a lot to sell. Let's just see how that plays out. We can look at this on the intraday just to get a better understanding and refine what's going on at that point. Let's just get that in here. So we've got 1 and 2 here, and then 1 and 2 here, and then we've got 1 and 2 here, and then 1 and 2 here. So it looks like we've got a nice little impulse wave up there, so we could buy any of these. I mean, obviously doesn't really matter, but the good news here is that this is wave 2, so we're in the third minor wave, and then the minute wave here and minuet here, so we're in the third of the third of the third of the third, so it should move up quite strongly, and that's why we're seeing, you know, I'm putting sort of bets out on stocks in that case. So BHP here, for example, we've also got wave 1 to the upside here, then another wave 1 and 2 and 1 and 2. So we've been building in here, we'll build above that. So all of those iron ore stocks, FMG, Rio, Vale, etc., all looking pretty good to me as trades. Crude oil. Now the tricky thing here is that I could look at this, if I took this high here, we could look at this as an A and a B and a C wave to here and have wave 2 here. Now if that's the case, then we're just going to continue moving all the way up through here. If that's not the case, then we will look at this as an A wave, a B wave, and 1, 2, 3, 4, 5 here. This fifth wave is not finished. You might still be long in this market because we went long here, but we exited here. So this little move here, you can see that this is the beginning of the trend, and then the middle of the trend coming in here, and then another little correction. We will get the first high above the level here. So what we're going to do, if we're going to be bullish from here, then we'll just go, once we get that first high in above the level, wherever that may be, we're not interested in chasing that higher by the by, but we will be looking for the ABC pullback, and we will be going long on top of the B wave here. It's either that, or we end up retesting here again, and then coming down for this C wave of 2 over here, as the same as gold in a way. Let's just go to the 100 ticks and check on a bit more detail with all of this, a bit more data, a bit more still. Okay, so if I take wave 1 over here, which I'm kind of inclined to do, then it will leave me 1 and 2 here with 1, 2, 3, 4, 5 for the third wave, fourth wave, and then down as 1 and 2 and 3 and 4 and 5 here for the A wave here, then an A and a B, and 1 and 2 and 3 and 4 and 5 here. So look, it could be wave B or wave 1. It depends on how you want to view this over here. When it gaps like that and spikes like that, it's sort of like, do I use it, don't I use it, should I use it, and so on. It does count quite nicely here as a corrective pattern, I must say. So there's a good chance of having it as a wave 1 here, this wave 1 sitting over here, and this will be the same for you know, ETFs and other stocks as well. XOM, for example, will be doing the same thing here. So what we'll be doing there as well, we expect another high for XOM and that. But what we want is that first high above the level. This is a medium level here, halfway between two major trading levels. And we'll be able to get the setup here. So we just got to be a little bit patient, a few more sessions, and we'll be able to knock that out, and we'll be able to look to build it in again at that point. Otherwise, we'll just be mindful because we could end up coming down from that point there. So anyway, a bit of work to do, but don't have to worry about it in the next session or in the next probably 3 sessions, at least 2 anyway. We'll have a look at that, but this can based on these little 1 and 2 and 1 and 2 and 1 and 2 here, they need to play out to the upside. So it's probably fair to say that we could take that up a little bit higher in all of that, but we don't want to chase it because we'll just get trapped. Okay, but anyway, we'll pull that apart when we need to. When this is topped and turned, we'll check it all out. Alrighty, copper's another one where we've got that, you know, looking at wave 1 up here. I mean, in this move down through here, you know, it's a bit of an odd looking move. The best fit would be an A wave, a B wave, and then 1, 2, 3, 4, and 5. It does leave this one here a little bit short compared to the others. So on that note there, if we, it's quite close here on this one, but yeah, it doesn't match that one. So there's a few problems with that, you know. You start to get into the guessing game, and so once you start the guessing game, then you need some other robust type of analysis to get you there. And what we did with that is that we could count 1 and 2 and 3 and 4 and 5 up for wave 1 here, and then we got 1 and 2 and 3 and 4 and 5. So as a B wave, we'd have it up there as 3 waves, and then we got this other 5 here, so we knew that we could go long after that. So I'll need to readjust all of this now, so we can pretty much put wave 2 over there and look at this here as the A wave, the B wave and the C wave, but I won't call it in just yet. I'll just be a little bit mindful, because I would want, one of the things that we'd want was to have support on top of the 61.8%. So on top of the 48 here, we also want to see a classic trading levels pattern here as well. And we'll probably look at this as 1 and 2 here, and then 3 and 4 and 5 here, and then a correction here. So we'll look to add in the right time with all of this as well. If we can get a few orders under the 50,000, then we can build on top of that. Okay, so nickel's come back on, and yeah, so it's had this sort of massive drop. I don't know why it dropped and all the rest of it. We know that Chinese company had $8 billion in on the short side. I don't know how that's resolved or who's funded that or what the case may be, but you know, it's a Chinese company, and the Chinese own the LME, the London Metal Exchange, so they have obviously made a decision to manipulate the market to the benefit of the traders, of course, or just that one trader. So it's not a free and open price discovery market, the LME, anymore, which is, you know, it's going to turn a few heads over to the US, I'm afraid. But anyway, apart from all that, in terms of just tracking, this is US high grade. No, it's not high grade, it's just nickel. So I've just got to pick up the pieces, you know, from the low here. And it does look like we've got a bit of an impulse wave occurring here, but that could certainly be an A wave, a B wave and a C wave up here. So we'll wait for the 5 waves to finish, and then when it pulls back, we'll take the long on the B wave here, and that way we'll be safe. And if it's going to trend up, whoopsie daisy, if it is going to trend up, well, then we'll get it at the right time and we'll be safe, because otherwise it can just, you know, continue down at that point. I can't see it why it would continue down. I mean, lithium and all the battery products, you know, skyrocketing. So, yeah, so a bit patience on that. So uranium. So, yeah, I mean, after a bit more sort of research on the uranium market, Japan is, I think, the biggest intaker of uranium. I think they're opening up another 15 plants or something. But also too, we've got a bit of an energy crisis. We don't know how long the Eastern Bloc is going to be squabbling. So there's that energy problem there. You know, I mean, is uranium, you know, an answer or part answer to clean energy at the end of the day? I mean, you know, but all I can do is just look at the structures, and yeah, it looks bullish to me. So technically, we're looking for, well, the classic trading levels pattern was the arrival, the reaction, the first high above the level, the ABC correction. Then we normally take out the top here. So we talked about being long in here yesterday through here somewhere. So that's all good. We can see the stochastics down here sort of building up to push up again here. It's on the 100-tick chart, not the daily chart, but enough to push it up there. I've counted this here as 1 and 2 here, then 1 and 2, and 1, 2, 3, 4, 5, 5 to here for the third. So I'm just wondering what this top is here. I had to sort of scratch my head. It looks like a 5-wave move down here. It could be part of a C wave here, as an A wave, a B wave and a C wave for over here, and then we just go straight up from that point. Otherwise, the worst case scenario would be an A wave here, B wave here, and a C wave here, maybe wanting to try to cover that gap, but doesn't really have a history of doing that, and then up from that point. So, and there's another way you could look at it as well, with an ABC here, and then up for one, up at that point there as well. But I'll just chill, and we'll just wait. It's all good though. We're above the main price point, and we're entering into group 2 here. So, good for uranium stocks. Now, natural gas. So with natural gas, we can look at natural gas as a couple of different ways. We can look at it as a wave 3 over here, but it has pulled back a little bit too far, like Bitcoin. But we know that the move down here is corrective. We know we've got an A wave, a B wave, and a C wave if we want to look at it as wave 2. We can look at this here as wave 1 and 2 and 3 here. So that means that this wave 1 over here comes in over here, and this wave 2, whoops, the daisy, this wave 2 here comes in over here. So we can look at it as 1 and 2 and a third wave here, and then a fourth wave here. But the fourth wave is a triangle pattern. So the triangle pattern is the A, B, C, D, and E here, and then we move up from this point. Or we can look at this as 1 and 2 here. It will resolve itself as it moves along further up here, but all we needed to do was to buy above that previous high there. That was the step that we took. And it hasn't really retested the 5,000 as support yet, but taking this high here and the low to just there, we can see that the 61.8% is across here, so that might be enough to push it back down at this point. There's different ways to view all of this. I won't go into the intraday at the moment because I can't give you a clean answer, but the scenario is it can just go straight up from there, or we'll get a kick back to here and then move up from that way. But either way, they'll be going up because we've got an impulse wave from that point. Alrighty, I'm going to leave it all at that. So thanks for tuning in. Cheers.